Freelancers, let's be honest. We didn't choose this like just to survive paycheck to paycheck. You choose it because you wanted freedom. But freedom means mastering not just your craft, but your money. Every dollar you keep is power. Power to build wealth, power to grow your dreams, power to protect your future. And right now, the truth is brutal. Most freelancers are donating thousands unnecessarily to the governments simply because no one taught them the rules. Today, I am changing that for you. You are about to learn how to flip the script and start winning legally, ethically, and powerfully. Let's go. Hey friends, welcome back to Loved Soul Sanjay, the only place where law, finance, and entrepreneurial psychology collide to give you real financial power. Today's episode is your freelancer tax survival kit. The lessons they should have taught you on day one. So whether you are making $5,000, $50,000, or $500,000 from your skills, today's strategies scale with you. First, set up the right business entity. Think of your business entity like the walls around a castle. No walls, easy for enemies to even invade. Wrong call, walls collapsing in a storm. The right structure, like an LLC taxed as an S Corp, SC Corp isn't just a paper form. It's protection, it's flexibility, it's tax efficiency. A sole proprietorship might feel simple, but it's like walking into battle with no armor. You are liable for everything. With an LLC taxed as an SC Corp, once you are earning around 80K dollar, you are separating your personal life from business risk and legally lowering your self-employment tax burden. Imagine saving $8,000 a year just for signing two forms and following the rules. That's not fantasy, that's strategy. Moving forward, the next one, maximize deduction like a business. If you only remember one thing from this video, let it be this. Business owners don't get taxed on what they earn, they get taxed on what they keep. And deductions are the bridge between earning and keeping. Every business dollar spent wisely is a dollar shielded from tax. Think office expenses, equipment upgrades, software subscriptions, internet and phone bills, even that coffee shop brainstorm session. But, and here is the kicker, documentation is your weapon. No receipt, no deduction. Mixing personal and business spending risky. Use separate business bank accounts. Track weekly. Become obsessed with your records like a dragon hoarding gold. Because when audits season comes, it's not the loudest who wins, it's the most organized. Receipts is equal to shield against IRS fire. Moving forward, the next one, pay estimated taxes quarterly. Quarterly taxes might sound painful, but it's actually freedom. Freedom from surprise. $10K tax bills in April. Freedom from late penalties stacking against you. Freedom from IRS stress letters in your mailbox. Imagine putting away 30% of every payment automatically. Imagine logging into your tax portal quarterly, paying a quick installment, and moving on with your life. Feels powerful, right? Because it is. Apps like Catch, QuickBooks, Self-Employed, or even your bank's auto transfer tool can automate this for you. Success in freelancing is built on system, not how. Set the system, trust the system, then focus on your genius zone. Automation is equal to tax freedom. Moving forward in next one, open a SCP, IRA or solo 401k. Here is a brutal truth. If you are freelancing and not investing in retirement accounts, you are losing twice. First to taxes, second to time. STP era or solo Posia 1K lets you put away tens of thousands of pre-tax while letting compound work for you. For example, investing $15,000 a year at 8% return for 20 years grows to almost $750,000 without paying taxes yearly on that growth. You are legally stashing your taxable income now and building tax advantage wealth for tomorrow. Wealth isn't built by chance, it's engineered. And your solo 401k is your construction crew. Engineered wealth versus random survival. Moving forward, the next one, track business mileage the smart way. Business mileage tracking sounds small, but it's massive hidden tax shield. Driving to meet clients, delivering products, networking at conferences. Every mile legally stashes your taxable income. Imagine driving 10,000 business miles a year. That's over $6,500 deducted right off your income legally. Apps like Avalanche run quietly in the background and let you swipe trips into business or personal categories data. Freelancers who document mileage consistently often save more in taxes than some full-time employees earning modestly. That's real leverage, you can say. Your car, a rolling tax shield. Moving forward with next one. Deduct health insurance premiums. Healthcare feels like a crushing cost for freelancers. But guess what? It's one of the few deductions that's still standing strong. If you're self-employed, your premium for health, dental, and vision insurance, and even for dependents are fully deductible. This deduction can easily mean $3,000, $5,000, or more shaved off your taxable income. But here's the key. You must pay it personally, not through your business entity. And you must not be eligible for an employer plan elsewhere. Set it right once, and every monthly premium pain turns into tax relief. You are turning a weight into a weapon, pain to power, reserves into help premium shield. Moving forward with next one. Work with the freelancer, savvy tax professional. At some point, DIY taxes hit a wall. You miss a deduction here. You misfile a 109 and there. You lose thousands slowly. Smart freelancers, it isn't just a tax preparer. They are a strategist. They sit down with you quarterly. They plan your deductions. They warn you about industry-specific credits. They suggest entity upgrades before you overpay. They turn a pay gift into a non-event instead of a financial crisis. Think of your CP as your personal tax coach, guiding you from survivor freelancing to sophisticated wealth building. Tax professionals is equal to money multipliers. Moving forward, the next one, advanced tax planning. Play the wealth game. The difference between rich freelancers and broke freelancer isn't talent, it's tax literacy, it's strategic anti-planning, it's deductible investments, it's rental property moves, it's leveraging every line of the tax code legally, mathematically, and intentionally. The rich play the tax code like a symphony. The average, they show blindfolded. You cannot win a chess game if you think you are playing checkers. And you cannot build a fortune if you think taxes are just a bill, not a battlefield. The wealthy don't hope for low taxes. They design low taxes. Blueprint over blindfolds. Moving forward with next one. Common freelancer tax mistakes to avoid. Here is it is a list of freelancer tax mistakes. Mixing personal and business funds, or getting quarterly estimated payments, skipping home office deductions out of fear, not reporting 1099 income quarterly, or correctly you can say, not tracking mileage or business expectancies daily, hiring a CPA who doesn't understand freelancers. Every one of these mistakes compounds and costs you dearly. Fix them now. Set clean systems. Protect every dollar. You didn't come this far to build a leaky shit. Tax mistakes is equal to wealth leaks. So here is the empowering session, you can say. Today you bought the blueprint. No more fear, no more confusion, and no more overpaying because you didn't know better. You are armed now. You are dangerous to mediocrity. You are building wealth intelligently, legally, and aggressively. If you are committed to taking full control of your freelance empire, smash the like button. Subscribe for the next level of legal and financial mastery. Comment below. I am building legacy now because you are not just freelancing anymore. You are leading. You are designing freedom. And trust me, the best is yet to come.